Hey guys, I'm Jason Wiggam, and I'm here to answer your burning tax questions. Yeah, there are a lot of red flags that increase the chance of an IRS audit. So, what you have to realize is the IRS gets a lot of data from third parties. You know, they get your 1099s, W-2s, they get banking information, and they take all this data into their computer system, and then they analyze that against your tax return filing. So if there's any discrepancy, they're going to let you know, or they'll reach out to you. They also look at, sort of standard amounts for items, and based upon like where you live, how much money you make. So for example, if I make $150,000 and I deduct 100,000 in charitable contribution deductions, that's probably going to be way outside of the norm for someone making $150,000 living in Atlanta, and they're much more likely to pick up my tax return for audit. Obviously, a lot of cash transactions, foreign bank accounts, and a lot of other hot button issues are red flags too. But thank you. So a tax credit's like a payment. It reduces your tax dollar for dollar. So it's like the equivalent of like $100 tax credit. It's the equivalent of making $100 payment towards your tax liability. A tax deduction reduces your income dollar for dollar, but you save your tax rate. So if the deduction is $1 and you have a 30% tax rate, you're going to save 30 cents. Whereas with a tax credit, you would get $1. This is going to sound strange coming from someone who literally earns his living representing people who don't do these things, but you should file and pay your taxes on time. The penalties and interest and sort of the whole system set up by the IRS to punish you for not doing these things makes it to where it doesn't make sense not to. So file on time, even if you can't pay, and if you can pay, even better.